to show you the fundamental analysis of Power Mech Project Limited. As you can see on the screen, that this company has given the multi-bagger return in last few years. Uh, if you see this overall chart of this company, you understand that the company's price started in the you can say 200, 300, 400 price range. I think last 2000, since 2017, but after that there was a dip happen in 2020. But you can see that the return was negative in the last 4 to 5 years. But after that, the company business is slowly increasing, and now since last 2022, this price is moving upward direction very quickly. And you can see in the last 10 years, company has given, you can say, in last 5 years, 185%, but last 2 years, given the 348%. So please check the driver with fundamental technical both before investing in this company. The company is from the infrastructure engineering construction company, market cap 3,004,746, small cap company, enterprise value is 4108. Book value per share is 824 and P is 20.64. PEG ratio 1.23, dividend 0.06. Less dividend also sign of good particular company, good fundamental as well. If you see the company's overall portfolio, you will see that the company is highly credited in the providing the spectrum of the services in the power and infrastructure sector. Besides, the country have emphatically established the niche in the power generation, covering almost every segment, including the erection, testing, and commission of BTG and BOP, and operation of maintenance, repair, overhauling, renovations, and modernization of power plants and related civil works. Power Mech having its major operation in India, also extended operation globally, and has presence more than 10 countries worldwide. Very good company. So if you see that delivery of the company, you will see that the company is delivering 40 to 50%. Monthly delivery is saying 40. You can say monthly delivery is 40 to 50. 40% is also good. If you see the overall update, the company is providing dividend of 1 to 1.5 rupees every year, and you say consistent dividend, but very low dividend with respect to the overall price of this company. If you see the company's return is just 5%, is 185% last 5 year, 2 year return is 348%. And if you see the level of the company indicators, it is an overbound. Please take with the technical advisor before taking further position in this company. Now, companies from infrastructure, engineering, and construction company is from the small cap company, market cap 3,446, 3,746, enterprise value 4,108. But if you see the EPS, the company EPS 122, P is 20, and industry P is 62. Book value per share is 788, and the current price is actually more than their book value, is almost 3 times from the book value. Dividends big less, and number of shares subscribed 1.49 crores floating in the market, and face value trend. So you can see it's almost very good company. Let's see the website of the company. What are the different information you can collect from here? The company is having a very excellent basically presence in all over India. You can see the plant construction, maintenance, power plant construction, operation and maintenance activity this company is doing. Now you can see that the Power Mech project is one of the amongst leading infrastructure construction company based in Hyderabad, India, with the global presence and highly credited in the providing a spectrum of services in power infrastructure. It was established in 1999 by the authentic engineering enterprise Mr. S. Kishore Babu, with the chosen motto of providing service of the high quality, safety, and timeline. Three virtues still holding the company in the high street. What are the company deep information here? So you can see the company data, 208 project companies handling right now, 80 plus country, 80 plus client companies having 22 plus years of business experience. Company have 40,000 employees. The companies having all over the world in India as well. Very good company. Let's see more information about the companies. Let's see the results of the company. Quarterly results showing the excellent month on month, year on year, actually quarter on quarter growth by the company. 645 crore to 900 crore. Expenditure also increasing together, but EBITDA increasing by the company. Now, very importantly, other income is also something 200 crore almost, but interest companies paying interest every quarter highly, and the interest are increasing. This is a very mild concern with this company. Now, if you see the DAX companies tax increasing 42 crore to 71, but almost you can say PAT companies creating from 32 crore to 52 crore, net profit 32 crore to 52 crore. Associated which is very less, but if you talk about the component consolidated net profit of 32 crore to 50, please check with your advisor before taking further position in this company. If you talk about the annual return of the companies, okay, if you see the annual return, how the company is providing annually, which is exponential growth by the company. In March 2019, the company has given 2,261 crore sales, but this time, December 2022, overall year sales is 3,329 crore. EBITDA is also showing almost 370 crore. Very, very good. Last 2019, because the March 2019, this the overall EBITDA was 290 crore. After reducing the interest, the company is still able to generate the overall profit 248 crore. And in now March 2019, it was 204 crore. Okay, now you can see the PAT is also increasing from 141 crore to 183 crore. Net profit increased from 141 to 183 crore. And very, very good. The consolidated profit is on net profit is increasing 121 to 181 crore. Ratio, if you see the ratio here, the company's ratio is basically showing the overall return on equity is decreasing, return on capital decreasing. All these things are decreasing, but earlier it was very high from 23, 18%. And it is very, very sure that how this company and overall profitability is increasing, the company can create a very good return on capital by coming years. Book value increasing exponentially here from 474 to 709 in the last 5 years. Return on inventory ratio turnover is also is improving, and you can see here the working capital also improved from 127 to 97 days. Excellently, company is performing very well. If you talk about the balance sheet, one of the important things which every investor want to see is very, very positive, and that the company never changed the equity capital too much in the last few years, but there are some dilution happen. As you can see here, there are some dilution happen from 10 in 2014, the overall equity was 10.9, then 12.5, and then 14.71. And after that, the company never changed the equity capital. If you see the reserves are going exponentially from 805 crore to now 1136. And if you see the non-current asset here, that is 555, and current asset, if you see that, the company is having an inventory of almost 131, sundry debtors almost 548, cash and bank companies have 123 crore cash. And if you talk about the profit and loss companies having very good profit and loss statement here, if you see the losses are growing, profit, pivot and taxes and PAT is also growing, and net profit company creating 123 to 182 crore. Cash flow is very, very positive for this company. It's right now it's showing net change 60 crore positive cash flow from this company. Now, what is the positive thing more here? The promoter is increasing. Promoter is increasing their particular position in this company. So you can see that here. Okay, you can see that how promoter is increasing their particular position in this company. Okay, DIS also increasing, FI increasing their position. You can see FI is holding. You can say 5.14, DII 10.28, and non-institution is also holding is 20.41. Okay, now if you see here, the mutual fund is also holding in this particular stock, SDFC small fund and everything. Okay, please check the fair value before taking further position in this company. Fundamentally, is very strong company looking, but please check on the further decision on this. Thank you. Have a nice day.